Good morning, traders. Welcome to the TMT Pro Trader Premier video for Monday, May 15th. All right, guys. Well, same thing is occurring. We continue to be in this range. We're range bound, except the NASDAQ and Apple, of course, who's trying to eke out some gains. We had a CPI report that actually started influencing yields. Yields started to drop a little bit. That hurt the banks as well. So there's some really big things going on here. And again, guys, anything could happen. Anything could change right away, especially in this type of crazy market that we're living in. However, banks are lower. Transports are starting to roll over. IWM Russell 2000 is not participating, and that could be getting hurt by the dollar. Yields are starting to roll over again. There's a lot of uncertainty out there as far as technically in the marketplace. Okay, now we have this euphoria with Donald Trump. I do still believe, on my technical view, that we're probably going to head up higher a little bit more before we start the sell-off. And I do believe that this is probably why this market has just been holding in here. We get one more good news, a good news catalyst. We push up even higher, get into these crazy PEs in this market, and then the market starts to roll back down again. And that would be sometime probably in August to October. That's our time frame right this second, but obviously things do change. We could actually put a top in today and start to roll over, but anything goes right now. But there are some big warning signs out there. We're going to go over the commitment to trader reports. We have a lot to cover here in the Pro Trader Premier, so I'm going to get right started here. Okay, we have the NASDAQ NQ Daily. You can see here again, very overbought. MACD, RSI. We are right at the highs from 3 days ago. We need to literally start to break out of this. And if NASDAQ breaks out, NASDAQ can actually take the market higher. Even though we're lagging in the Dow Jones, we're lagging in the transports, we're lagging in the Russell 2000, pretty much mainly across the board, other than the NASDAQ of the 5 indices that we follow. This is one of our majors, right? So we have the transports, we have the IWM, the Russell 2000, and of course we have the NQ. Those are your 3 majors, guys. Believe it or not, S&P and Dow are not. But the Dow Jones is always talked about on CNBC and all of the news wires. So that's why it's a big importance, because everybody looks at, the Dow's up this, Dow's up that, but really it's a set of Dow 30 stocks. So we all know that. But anyway, these are your levels for today's trade: 56.25.25, and again the 3-day high of 56.92.75. 10-minute right here. You could even dial it down even a little bit more. Right here, resistance, and these are your little support areas here. Really, there is absolutely no pattern. If you want to define a pattern, if you really want to do it, you can say that this is an ascending triangle on a 10-minute, and I left it out for you guys because I wanted to show you. And it's pretty defined. On a 10-minute chart, you could say that it's an ascending triangle. Now, measured move, we go to the mouth of the triangle, right, and we go like this. Now we take this area here. Let's just bring it down a little bit more because we need to. Right there, right, and we put it right on the mouth of the triangle. All right. Believe it or not, that's this crazy move that could actually happen. And remember, 25, 25, 50 in the S&P. This pretty much holds true, right up to 57.80, guys. Okay, that could actually happen. Look at where we've come so far. Straight up on the elections, the 2 weeks ago, and then again. It's just absolutely absurd. But anyway, these are your levels for today's trade. Keep them in mind when you're trading, okay? But right now, this is your level. This is the new all-time highs. We're looking at 57.80 in the NQ. ES, the target's 25 to 25.50-ish. Could be lower, could be a little bit more. But no change here, 2400, 23.95. But you know what this is telling me here? This is showing me a small little bull flag, okay? Now, we need to break out of the bull flag in order for it to be valid. But small little tiny bull flag like we did here, we popped up and then we sold off. But look at what's happening, guys. French elections 3 weeks ago, about two and a half weeks ago. We go sideways for 7-8 days. We pop up on the results, and then we go sideways pretty much all week, doing absolutely nothing. This is why I say back off. If there's nothing to do, so be it. Let it go until there's something to do. You do not want to be churning your account, okay? Next is going to be the ES 10-minute. And as the ascending triangle on the NQ, we have a symmetrical triangle here, right into the apex. We have no idea where this breaks, right? If symmetricals either could break up and or down. But once it does, we give it a close above, and then we follow that break. Okay. More than likely, it'll probably break to the upside, because if the Nasdaq has an ascending triangle, more than likely these guys will continue to go higher. And again, our view here at TMT is that we go higher first before we go lower. Okay. These are your levels for today's trade. Remember the symmetrical triangle. Write them down on your charts. Okay. Oh, plot them, excuse me, on your charts. All right, let's talk about crude oil. Very big developments in crude and gold. Here's the bullish percent ENER based on a point and figure chart. We saw this. We're into the washout levels in crude, and I really like this as a counter trend retracement rally to get long, only for a trade, not to get long that you think oil is going to 100. I don't believe it's going to 100 based on supply and demand issues. OPEC is talking the game up. You have the oil producing nations talking its game up. They need oil at $55 to $65 a barrel in order for most of the nations to get break even. The Saudis $12 a barrel, so they're making some big money even at $47 a barrel. Okay, but this year we're into the washout levels. This is why I'm liking crude a little bit more to the long side. Daily shot of crude oil, you have here a couple of days above this line. Remember what we said, this is major support here, $47. We held 2 days. We take out this high of 48.34, we should hit at least a 49.50 or at least 50. Whenever this stops and fails, I'm going to look to get short. Of course, I will be telling you that as well. Okay, these are your levels for today's trade, guys. Your next target here, and this is your 47.20, call it, and then 46.23 are your support areas. Okay, 10-minute, same thing. We need to get above this $48 range. If we get above 48, we can shoot up at least a buck and a half above there. If not, these are your trades for today. They are valid for today's trade on both sides. Now, let's talk about our commitment to trader reports. Really interesting developments. We know that the producers, or the smart money in this report, and the speculators, which are the dumb money here in blue, okay, in this report, so the producers are lighting their hedge ever since February. Big lightening up the load here last week. That is a big major, okay, as the specs starting to sell their longs, okay. This is really interesting, because if that happens while you're at that washout levels, you're in these down in the pits, if you will, okay, they're now saying that maybe crude bounces. They would give it a little relief rally, so it bounces to 47, maybe 50, $51, and then look to re-enter short again. This is not a timing tool. I just want to tell you this, but this is a great tool to add to your trading toolbox of your technical analysis view to get an idea of what the smartest money are doing with their inventory. Okay, this is a big development for me. So I'm thinking if crude can sell off any time really hard, I would look to buy that dip immediately. If not, if we can hang in here for a day or two and then take out this daily range of these two higher closes for above 47.20, I would also look to get long crude oil. Okay, so far looking pretty good. As you can see, $48 is the culprit. If we can break above $48 and close above it, that would be an easy managed trade to get long crude. Here are your resistance levels. We get long crude below 48. You should stop anywhere in here depending on your risk tolerance levels. Okay. Next, let's talk about the bullish percent. ENER. I'm sorry, we did talk about that. All right, now let's talk about gold. We have a monthly chart of gold. As you can see, this little thumbnail, the 21 monthly EMA versus the 8 and the 21. When we get a crossover, we enter a bull market. We had a bear market area here. We failed, and now we're in a bear market for the last about 3 or 4 or 5, actually since 2012, okay, and now we're in 2017, so at least 5 years here we've been actually trading in a bear market, excuse me. Now we're trying to break and alleviate that. 1300 is going to be the really big number, guys. 1300. We're at 1227 now, okay. If we break below and we hold below 1200, we really have to get back above 1220, 1227, all right, actually 1230, 1250. To even alleviate any big downside pressure. That's the bigger picture. Okay, let's take a look at the weekly chart. The weekly chart tells me the same. Here's 1300 right here. This is a big long downtrend line from 2011. So guys, 1300 really needs to get taken out. That does not mean you cannot take a long trade now into the 1200 area, and if it held, obviously. But you could see this downtrend line. This is going to take a lot of work. Okay, we need to see some fear come into the marketplace. And here's your up close daily daily gold. And as you can see here, another small little bear flag here. And we're turning up on the RSI. We need a crossover in MACD, which is going to take another few more days. So there's a lot of work that needs to be done here. Maybe even we get to the 1200. But we're going to need to hold 1200. We lose 1200, I think that we might even possibly be entering back into a bear market, which I think we're in a second stage bull market. But it's close, guys. I mean, it could really flush pretty hard here, gold. So we need to see and pay attention to it. Remember, seasonality-wise, gold starts to really shine mid-July all the way up until September, October. So let's see what happens going into the next couple of weeks. 10-minute gold to alleviate the downside. 1231.50 needs to get taken out to get long, and 1247, 1249 will be your target for a gap fill area here. Okay. And then these are your support levels for today's trade. GDX daily needs to get going as well. Yeah, we did have a few days up. That's nice. We got to get back above our proprietary price channels and at least get to the neckline here at 24.50, 24.10. Okay? These are your levels on the daily chart of GDX. Let's take a look at rates. As you know, CPI caused rates to really roll over. Banks got clobbered last week. Well, I shouldn't say clobbered, but really didn't do much. They actually sold off. We are now in a new defined downtrend from a symmetrical triangle. Remember, guys, we just tagged the 38% retracement. We have plenty of room to run before this market, even the yields even become bearish. So even if we got down to the 64.8% at 1.84% here on the 10-year, we'll still be bullish. Although we are below the 200, that would not be good as well. But if we can hang above the 200 and get down to 2.13% somewhere in that area and hold and start to break back up again, well, then I think that rates are rising again. And remember, I think bonds eventually will go lower, but this will be a great opportunity if bonds can start to rally and take out the local swing high here at 154.30. Okay, that'll be the gap play on the long side of the ZB. 10-minute, we did alleviate this downside pressure of lower lows and lower highs. We need to take out 152.82. That'll be a target area here, but for guys, for today's trade, we got to take out the high right here. Okay, that high, let me go grab my crosshairs, right here at 151.24. We take that out on a closing basis. We're looking for targets right up in here, 152.28, 152.53. Okay, next is TLT. Same thing, guys, 124.45 now. As you know, 200 continues to go lower. We need to take that out in order for us to get a good proper buy-in for a gap fill here, and then we would reevaluate the short. Transports, big culprit, guys. Big, nice descending triangle. 160.76 and 167.98 are the 200. That needs to get taken out, and we're going to have that thin zone we've been talking about for months. That'll eventually fill the gap at 146.25. That's your daily transports. Keep an eye on that, guys. It's really big, and it's giving us some big signs here. Spiders, we'll go right into the index. We did nothing, guys. Look at this trade. We have done nothing for 2 weeks, going on 3 weeks of trading. Absolutely insane. This is what the markets want you to do, to get short, and then they're going to bring the market higher yet again, just like they did here back in December all the way to February. We've done nothing. We went sideways. We had a 12-day run. We did nothing. We just sold off very slightly, and then we had the big pop-up on the French preliminary elections, which is totally insane that even the market pundits, there's smarter people than that in this market, and it's just insane to me. It's absolutely crazy how this market is being reacted to. But remember, guys, when the market does go, it's going to go in a big way. Spider, 10-minute, no change. 239.54, 238, guys. No change. We popped up a little bit. We broke up for 2 days, and we sold off again. This has been holding true pretty much all of May. Those are your two big levels for today's trade. And again, these are your additional areas of resistance and support. Next is going to be the IWM. And again, IWM breaking down here. Not a good sign. We've seen this before, right? We've seen this song play out before. The one index rallies, the other ones lag, and then they all rally again. You need one little catalyst. Donald Trump says something positive, and guess what? The market starts to rally again because you're in that sentiment trade. There's nothing else left but the sentiment trade. When the sentiment trade is alleviated and there's nothing left to push this market up, the market will go down. Remember that, okay? Will go down, and it's going to go down in a big way. Again, it's all about the timing, but that's exactly what we're looking at. Look at this IWM trade. Look at how horrendous this trade is. That's why I stay away from the Russell. I do not trade Russell. I haven't traded in a while and have no desire to. Look at this sideways. If you're playing options, you're getting killed. Unless you're writing calls or puts and you're doing spreads, you're writing spreads, you're getting clobbered here. This is why you stay away. If you're not moving and making higher highs and higher lows, or lower lows and lower lows, you do not want to be playing long options, okay? You have to identify what you're trading, okay? But anyway, these are your levels for today's trade. They are absolutely valid for today. Last is going to be the Qs, just like the NQ, trying to take out the 138.40, okay? 137.04, your other area of support, that's your resistance, and then of course the 135.80 right up in here, all right? And your last is your 10-minute. You could even call this even an inverted head and shoulders at the high. I really don't like to see that at the high, so I really very rarely call anything like that. Not that it wouldn't work, it's just really supposed to be at the low somewhere. 136.60, 138.30, is your cluster area of support. We lose this, we can get down to 137.69 and 137.45. That was Thursday's low. Okay, so let's see if that happens today. Guys, a lot of info to process, okay? We're getting this video out to you as quickly as possible. Keep an eye on that, but I know there's a handful of you guys that are trading crude oil and gold. There might be some great long opportunities here. We still need to wait it out, but really put it on your radar. Have a great day, everybody. We'll see you tomorrow.